Michael, what do you think about, the number was a beat. So more people bought homes than expected, more people than have all year. At the same time, we see almost no inventory out there. What does that mean?
Well, one thing to keep in mind with this NAR number is that it's seasonally adjusted. And the characteristic that we've seen this winter season and last winter season is unseasonality, like more buyers in December and January than in normal Decembers and January. So that seasonal adjustment really makes it look extra strong right now.
And then, Michael, if we go to that point that Matt and I were just talking about, what happens as rates start to rise? How much of a consideration do you think that has been for buyers?
So as of this week, buyers haven't really slowed down at all. We know that we can look at the last time that rates rose significantly, which was 2018, to finish the year of 2018 about 1% higher than we started. And we can see that that created a little bit more inventory to start 2019, like 10% more. Not a big flood, but more inventory. So we can expect that again this year to maybe get a little more off the record lows, the record tight inventory, to maybe give a little more opportunity for like first-time home buyers.
If we see mortgage rates go up through 4, does that mean anything to you? It's a big round number, so I'm sure we'll report on it. But how much does it matter that rates are rising this much? We see words like surge and soar, and nonetheless, a lot of people think 4% is still a relatively decent rate.
It sure is. So 4% is actually significant in that it is the decade-long average. So when we're above 4%, we're now above that decade-long average, and it could be that that's the threshold that people really, consumers start to feel. We know that in 2018 it went to closer to 5, like 4.8%, and you could feel the demand slightly weaken at that time.
So at the end of the day, Michael, especially for first-time home buyers, what's the advice? I mean, how should they approach a market like this?
Well, when people ask me for advice on whether to buy, my advice is always, if you can afford the house and you love the house, buy the house. If you can't afford it or you don't love it, don't buy it. Don't try to time the market because it is about a longer term commitment. And in the US, frankly, right now, we have money is still ultra low, and a 4% rate in a 7% inflation environment is still a really good deal. But if you can't afford it, don't buy it.
Michael, I have one quick question. A lot of people were expecting some relief in terms of taxes. We didn't get that SALT deduction cap release. Does that affect the market seriously, you think, especially in places like New York and New Jersey? We're looking at very high taxes.
We can't really see that specifically. We know that almost all of the legislation, all the structure in the US is about supporting the homeowner. So tax deductions or pandemic relief, things like they're all about making sure people stay in their homes and have affordable home payments. So slight adjustments like that do not seem to really deter the demand.